Hello traders and welcome to another video review. Today is Friday, February 11th of the 2022. Let's start with the Forex calendar. As you can see, some data from the China had been published. CPI and PPI data were published deep in the night. During the London session, we got plenty of data from the UK. Some of them had been published already, like a GDP, which was definitely better than expected, minus 0.2% versus minus 0.5% expected. Nevertheless, on the monthly basis, we are still below the last reading of 0.7%. Industrial production beats the expectations, 0.3%. Manufacturing production in line with the expectations, 0.2%. And the visible trade balance is exactly as the expected, minus 12.4 billion pounds. The GDP from the UK is slightly worse than expected, 1% quarter to quarter. Expectations were 1.1%, but it's still at the same level that the last reading of 1% anyway. CPA and Harmonized CPI data from Germany have been published as well. CPI is in line with the expectations of 0.4%. Harmonized CPI is in line with the expectations as well, 0.9%. We are waiting for the CPI data from the Switzerland, and please pay attention to the key bank rate from the Bank of Russia. This news is scheduled for release at 11:30. During the New York session, we got only two events. University of Michigan inflation expectations. They expect inflation to stay at the level of 4.9%, and the Baker Hughes US rig count for all of you crude oil traders, scheduled for release at 7 p.m. Because of the Chinese data, let's start with the Australian dollar. The Australian dollar to American dollar daily time frame chart is, as you can see, following our scenario. However, the level of 61% of the retracement of the last wave down, 7,183, had been violated significantly. We have a big, nice pin bar here, so that's definitely something that is telling us the bears are in charge with the market, and they want market to go lower. This is clear as the sun is. So this is our scenario. We don't need Fibonacci anymore. Our scenario is that the market will go lower towards the next technical support. So let's put some technical resistance levels here. Let's update our chart to the newest data. 7,252, 7,278, 7,317 are the key technical resistance levels. And if we speak about the technical support, the technical support is seen at the levels of 7,055 pips, and then 6,992 pips and 6,968 pips. This is as well the target for this current wave. Here we can see a short-term trend line here. If we just take a quick drawing, we have this, let me put it in orange again. We have this short-term trend line. Maybe something like this would be much more appropriate. There you go. Short-term trend line. We are out of the channel. First wave down, retracement, big down candle, just like here. History repeats itself, and now we are going lower. So the Australian dollar definitely is following our scenario, down scenario. That is GDP to the US dollar. So cable is next. Daily time frame chart of cable. Great Britain pound to US dollar is showing the signs of weakness. Why? We got this level here, 1.3605 rejected for the first time, and then yesterday rejected for the second time, and yesterday's rejection has left a big upper shadow on the daily time frame candle. So let's just extend our channel, because of course, yeah, we are out of the channel. We are still out of the channel. Yes, that's for sure. Let's just extend our channel. We will not adjust this channel. Let's leave it like it is. That's nothing. It doesn't change much if we adjust the channel. Let's leave it like it is, because it's been working perfectly for quite some time. So right now I think it will be appropriate just to leave it like it is. And now 1.3515 current technical support, of course, if violated, and it should be violated because of the increasing bearish pressure. The next target is 1.3412, 1.3359, which is the low of the late January 2022. If the market is back to the channel, it's a very, very bearish signal, very, very bearish indication, because then we will have the momentum in the negative territory as well, which means bears will be again in control of this market. So that breakout might be just a false breakout. There is no continuation, however, of this up move on the British pound. What's left for today? I think we should take a look at the of the American dollar to the Swiss franc, because we haven't seen this market for quite some time. There is a CPI from Switzerland scheduled for release today, so that's a kind of a event that might increase the volatility, that might trigger the volatility on this pair. As we can see, this channel is pretty appropriate, and the market is trending inside of this channel. However, the technical support seems to be much more attractive for bulls than the channel. Nevertheless, the price is back into the channel. It tested 9,295 pips, and might be heading towards the recent local high at 9,343 pips. Of course, still the key short-term technical resistance is 9,377, just where the blue arrow is, and the market keeps moving inside of this channel. And please notice the fact that this channel was made after a significant bounce from the technical support at 8,919. So this is why this channel is important, and this channel might be still a key technical pattern on the daily time frame chart of the US dollar to the Swiss franc. Let's take a look at the S&P 500. Daily time frame chart of the S&P 500 is now technical. Why? Because we have a very, very clear rejection of 61% of the last wave down. So we trace 61%, 4,594. First rejection, second rejection, bearish engulfing pattern on a daily time frame chart is always not good for bulls. So we need a strong breakout above 4,594 and breakout towards the second upper half of the channel. If there is no breakout, the market will reverse and go towards 4,300 and 4,254 again, and it might even go below this level as well. Momentum is hovering around the level of 50, which is the neutral level, of course. So please keep an eye on the current behavior of the S&P 500, because it will influence the Bitcoin. If the Bitcoin market will follow the S&P 500, so that's the same situation. 61% has been retraced, 44,651. This is the level. Of course, 45,429, which is the upper supply zone, has been violated, but there is no daily candle close above this level, and we are heading towards the overbought market conditions, which are still not hit. Okay, not tested. So again, 1, 2, 3. This is the fourth day we've been fighting for this zone. I've been telling you guys about this zone a couple of times at least, because it's a key technical zone, it's a key supply zone for the Bitcoin. So please keep an eye on the zone, because if there is no breakout, there should be some sort of the short-term pullback or correction. The same situation on S&P 500. Bitcoin will follow S&P 500 right now, so please keep an eye on both assets if you trade them, if you analyze them, because one will influence another. Both are correlated positively. If S&P 500 is going up, Bitcoin is going up. If S&P 500 going down, Bitcoin will go down. Key area here, key battle for the bulls and bears here on the Bitcoin. Please keep an eye on this situation to be most informed when the breakout will happen or reversal to the downside towards 41,188, 39,540 would happen. That's everything for me for today. Thank you very much for listening to this analysis, and I hope I see you guys next time. So take care and bye bye.